Happy Tuesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Tuesday, January 16th, 2024. Hope everyone had a wonderful long holiday weekend. Shout out to Dr. King. So we'll start with our executive summary here from today's leadoff morning note. As always, if you would like the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So today's key macro event is the Hawks have flown to Davos. Expect tactical U.S. dollar strength. The nuance there is that early indications suggest global central bankers intend to use their platform at the annual World Economic Forum in Davos to push back on aggressive pricing of rate cuts in money markets. From a market implication standpoint, no G4 central bank has more to gain from hawkish rhetoric than the Fed. Specifically, money markets are pricing in much more policy rate easing by the Fed over key time horizons. The gain aspect of more to gain equals tighter financial conditions, and that is what we observe to start the week. From a market implication standpoint, with VIX expiration and OPEX this Wednesday and Friday, respectively, we may not see the pending deluge of hawkish rhetoric impact risk assets as much as they ordinarily would due to Vanna and charm flows. As such, investors must be prepared to risk manage some cross-asset volatility in the coming weeks. Whether any such volatility leads to a row-row phase transition in the top-down market regime remains to be seen. And for those of you who are not familiar, row-row just means risk on to risk off or vice versa. But the probability of a row-row phase transition has risen lately per our macro weather model and fundamental research process. At a minimum, bulls should strongly consider heading into February with some downside protection into the portfolios. Refer to our weekly options overlay report for more insights on that, and we will have a new fresh options overlay report tomorrow afternoon, Wednesday, early afternoon. So transitioning to our increasingly improved 42 macro dashboard, some new functionality here for you members of Team 42. Appreciate y'all. So we'll expect an email later today or tomorrow on all the new functionality there. We'll just start with our signals from our trading range signals from our friends over at Longbow. We're getting a oversold signal in the 2-year nominal treasury yield there, so be aware of that, especially heading into what could potentially be a deluge of hawkish Fed speak this week. We're also getting an oversold signal in Bitcoin there. In our opinion, that's probably a buying opportunity, just given what we're continuing to see out of the Ethereum market. In terms of our 42 macro aware community here, we got a great question here over the weekend from one of our clients here about the 3-month annualized inflation. It says, thanks for always breaking down the inflation figures. It's wonder why you use the 3-month annualized figures rather than the year-over-year or the month-over-month figures like you normally see reported. So the short answer is that the 3-month annualized rates of change, the momentum in that time series is a leading indicator for the momentum in the year-over-year time series. In so much that inflections in the momentum in the 3-month annualized time series are leading indicators for inflections in the momentum of the year-over-year time series. So monitoring inflation on a 3-month annualized basis and really monitoring growth statistics as well from that perspective allows you to front run what everyone else thinks about growth and inflation, by looking at lagging year-over-year time series. So this is something that some of the best investors on the buy side, the global buy side, this is how they think about understanding macroeconomic dynamics, and ultimately, that's why you see it embedded in our process, because we don't want to be like everyone else who's paying attention to the lagging indicators like the year-over-year time series. We want to be front-running their trades, front-running the decision-making processes that they are inputting into their investment decisions. So we'll wrap it up there. Darius Dale presenting our macro minute for Tuesday, January 16th, 2024. Everyone have a wonderful day out there. Best of luck out there, and we'll catch you back here tomorrow. Cheers.